here in the U.S., higher food and fuel costs are causing restaurants to raise prices and change their menus. Joining us now with more on the food inflation fight is Gerard Hart, CEO of Texas Roadhouse, a restaurant chain with 340 locations in 46 states. GJ, good to talk to you again. These kind of fluctuations are forcing restaurateurs to have to think like ag traders.
Well, I think you need to take a longer view of the world, and we've continued to really protect our guests with a value menu and why we've lagged behind on pricing, and we think we're positioned well during these times.
So you had inflation, though, did eat into your first quarter because it's costing you more to buy the products to put on the table in the first place. Are you going to change suppliers? Are you having to change your pricing on your menu?
Well, again, we look at it long term. Typically, most of our proteins are contracted out as they are in 2011. In the first quarter, it was mainly produce, which we do not hedge, and lettuce and potatoes were the two culprits. Having said that, as we look forward, we did take a 1% price increase in late March. But if you look at our April numbers that we reported at our earnings release a few weeks ago, our comps were 5.4%. So we feel very good about where we're positioned and that the guest is still appreciating the value that we have.
Right. We saw those revenues increase in that most recent report, some of that having to do with more store openings. Are you going to be able to continue with the pace of openings?
Well, we've said we'll do approximately 20 restaurants this year, which is about a 40% bump up from last year. We're continuing to hire people, so we feel good about where we're going and where we're growing. And again, we're a growth restaurant company, and we're going to take it cautiously, but we are still growing, yes.
So you are hiring. Are you just hiring in those new locations?
Well, we're hiring in the new locations, but our support center, we've increased our staff in the last 12 to 18 months 10% to support those new restaurants as well as existing restaurants. And so, yes, we're continuing to hire all over the company.
Would you be asking the government at this point for something like a payroll tax holiday? I mean, we've had economists on this show say businesses like yours need that in order to feel confident to add to your staff. What would make you more confident to add?
Well, we feel pretty confident right now in terms of the numbers and where we're going. I don't know if we'd ask that or not. At this point, we believe it's incumbent upon us to continue to be the value leader in the category, and ultimately that will drive traffic. And I think we do need some stability and for the government to provide that stability so that people will continue to hire and feel confident in the future. And that uncertainty with health care and all the other things that are ahead of us, that certainty is important. Having said that, we again feel very good about where we're positioned and where we're going within the casual space.
Now, I remember talking to you a few years ago, you said, particularly for beef, which makes up a big part of the offerings on your menu, you're buying like 25% of that supply off the market versus from regular suppliers there. Are you changing how you do your buying, how frequently you do your purchases given the run-up in grains and the bleed over to higher meats?
Well, a couple of years ago, it was about 25% that was unhedged when you and I spoke. However, we have the opportunity to lock in any time that we see the opportunity to do so. We've done the same thing this year. Right now, we only have about 10% of our beef that is unlocked, and we feel good about that. We entered the year with about the same amount, 25%. So we've locked in that additional 15%, and again, we'll see how it goes from here.
So your average per person check right now at one of your restaurants is about $14.50. What are tips like? I mean, what are people, when they're buying differently, when they are managing their pocketbook differently, how does that translate to an order?
Well, let's put it to you this way. We haven't changed our service standards at 3 table stations, so our servers will give that guest the attention that they deserve. So I feel very confident that the tips that our servers are getting are still very, very healthy. And again, we have such value in the first place that the guests appreciate that. So we haven't changed course, lowered our food standards or lowered our service standards. And with that said, you know, our guests feel good about that, but more importantly than even our guests is our employees feel good about what they're doing. And we try to provide that stability, and ultimately they'll do the job and make the tips that they deserve.
Are there markets, states you would not go near right now because of worries about the economy locally?
Well, right, you know, we are not heavily concentrated in the tougher markets like Las Vegas and California and Florida. But right now, our growth strategy hasn't changed. It's where we have the people. We do not depend on media to drive our business. It's all about building relationships one guest at a time. So just by that nature, we will grow all over. And no, there's not any particular market that we're not going to go into. In fact, we're going to open up Southern California this year, Washington State. Those are non-tip credit states, and we feel good about that.
All right, GJ, thanks for coming on and telling us how you're managing all the pressures right now.